Energy. We are talking more about energy. It's been a rough year for natural gas, which Adam has talked about quite a bit. The commodity reached a 7-year low this month and briefly rallied 50% before falling again Tuesday. And although word came this week that President Obama may continue President Bush's drilling plan, my next guest thinks the fundamentals are still very weak for natural gas. Joining me now is Stephen Schork, president of the Schork Group. And Steve, good to see you again.
Great to be here, Betty. Thank you.
So we have seen this massive rally for natural gas, but why do you think that we're in for a correction here?
Simply, we just have too much of it. At this point, Betty, we are about in the last month of refilling storage before we go into the winter demand season. Now, going into the Labor Day holiday at the beginning of this month, we had a situation where we couldn't put gas into the ground. Contractually, here in the East, we weren't allowed to, so gas just stopped flowing at that point. There was too much in the pipeline. So we're in a situation where in a couple of weeks, we are going to literally be at capacity. You're not going to be able to put gas into the storage fields anymore because it's maxed out. So you have to ask yourself, if I'm producing gas, and yeah, we're still producing a lot of gas, and I can't put it into the ground, where do I put it? Well, I have to put it onto the open market. So what we saw back at the end of August, beginning of September, was a free fall in the cash market. Gas down in Louisiana dropped below $2 a decatherm. Now what happened, Betty, is I think the speculators got a little happy with themselves, oversold this market when they saw the weakness in the cash market, but now we're topping off our storage. So the buyers are back, the storage players are back. There is a bit of a bid in the market, and now what we are seeing now in the gas market is a massive short covering rally. But mind you, in a few weeks, you're not going to be able to put this gas in the ground. It's going to wind up on the spot market. The potential for a crash is there.
Right, but Steve, in this short covering is what I presume what you're talking about. I mean, who got killed in this?
Well, I mean, it could be anyone. It could be people who were trying to front-run the UNG. The UNG was rolling, so they were selling the October contract, buying the November contract, presumably. You know, people might have tried to front-run that, i.e. sell the October before the UNG came in and started selling. If they did that, they got killed. Essentially, any speculator here who sold ahead of the Labor Day got killed. Now, who's benefiting from this? It's the producers. This is mana for them. They did not think they were going to get an opportunity. We saw a lot of production at the beginning of this month shut in when we saw a $1 handle on gas. But you know what? We shut up to near $4 yesterday. A lot of that production's coming back online because a lot of these producers sold into this. So there you go. The producers don't believe this can last.
Now, Stephen, that's a really key point. You said they effectively shut off the spigot. You and I were talking about that a couple weeks ago. It looks like they did. How long does gas need to stay above a certain threshold, whether it's 3, 350, 4, before they turn the spigot back on?
Well, the spigot, especially when we're talking about the non-conventional plays, the shale gas, the coal-bed methane, it's a fairly quick turnover, and these producers have a high degree of flexibility, and it doesn't take much. And as you saw, Adam, 2 Thursdays ago, when this short covering rally began and we surged 40 cents, you started to see a lot of producers hedging then. So it only took a one-day spike to get these guys back into the market, back producing. Bottom line is we're going to go into this winter with about a 500 BCF overhang. That is more than 2 weeks worth of peak demand, record demand for this winter. There's a
Okay, Steve, sorry, we've got to leave it there because we're coming up against our break. But thanks so much. Steve Schork, president of the Schork Group.